Today, we're going to dig into the equation for profitability in your restaurant operations. This equation is not unique to the restaurant business. In fact, it is the same equation that has been run through all organizations across America and probably across the world. Everyone is attempting to sell something, and if you pay for what you sell, you should be left with some gross profit dollars. However, the appropriate way that you account for what you actually sold is through the second equation, which is counting your beginning inventory, adding in your purchases, and you subtract out your ending inventory. That then gives you your cost of goods sold. Challenge, oftentimes than not, is that mom and pop, as well as small organizations, are not taking ending inventories. And so they have to use something in proxy of cost of goods sold. What I've noticed them do is take their purchases. So let's walk through the equation, both with actually following the process of counting inventory, and secondly, the process of bypassing counting inventory to then predict out the cost of goods sold and ultimately your gross profit dollars. So if we followed through at the bottom, we started our operation with $25,000 worth of inventory. We purchased another 25,000, and then we counted ending inventory of $20,000. That equation gave us $30,000 cost of goods sold. We pop it into the formula up top, and you can see we are left with $70,000 of gross profit, or 70% gross profit percent. If we then take the second equation, we just take the purchases as the proxy of the cost of goods sold, which at this rate is really excluding any waste. And as a result, you can see that your gross profit dollars are more. And if in fact your gross profit dollars are more because you perform better or you manage waste better, then this is a good thing. However, in this case, we're showing that we actually have a count that we can substitute. And so it shows that we are spending an additional, we're claiming an additional $5,000 worth of inventory, worth of profits. Now you extrapolate $5,000 over the course of a year, if this is a monthly basis, and what you have is an extra $60,000 worth of income. And if you apply the 20% corporate income tax to it, you want to spend an extra $12,000 in income tax because you failed to properly account for your shrink. So now we've walked through understanding how the numbers work. And now you need an easy, effective way to actually count your inventory. And secondly, not only count it, be able to understand the variance between what was bought, what was sold, and what you should have on hand. And by having recipes, which we'll go to in this next video, you will see the importance of what I'm going to explain and share here. With Culinary Analytics, what you can do is simply click on your inventory report, and then voila, you're going to get a sheet that has all your inventory items here. Quick and easy. You can see what you have. You can have your cost by unit, your estimated on hand quantities. Then you could go ahead and enter the quantity that you actually have. And then what it does, it says this is the estimated dollars. And of course, in this item, we're showing that we don't have any, so $0. We counted 25 units of it. So now we showing we have a $2.50 worth of it. The item variance is the 25, and then a dollar variance is the 250. But this works in the other way as well. So if, for instance, let's say we supposed to have 100 on hand, and now we show that we're showing $7.50 negative variance. So we actually missing 75 units of this particular item. Now, granted, this is dummy data from my POS system, from our demo system, but you get the point of how something should be easy for you to go and simply go walk to your areas and do your inventory counts, and then easily get a summation at the very top of your page of exactly where you are in your where you add an inventory, and then you have a by item look of what the variance is. Now, let's extrapolate this out to understanding that in order to even get this list of ingredients, you need your recipes. And so we're going to get into the next video, or the next portion of this video, that walks you through the importance of the recipes. And then we'll also lean into how this all works inside of Culinary Analytics. Next, we're going to dig into why it is important to have recipes designed for scale, but also as it looks at the overall operations of your business. And then we're going to spin off to show you how all these different things that are built out in Excel sheets, which requires technical skills, can be all achieved at no additional cost inside of Culinary Analytics point of sale financial data analytics system. So here we go. So in this case, we have 3 recipes that we're dealing with, 4 recipes we're dealing with. We have the process of building out how many servings we think we're going to do, and then it scales the recipe. And you can go to each one of these and change it if you want to. But this requires you to have some functionality, understanding how to do forecast, which is also part of what's built into our system. And so after we predict out the three, how we feed it is that we know all these dishes come with rice, so then we sum up the servings required for rice. Then you can actually spin that off into an order guide where we aggregate all the ingredients into one Excel file that ultimately gives you a cost of goods. This is what your cost of goods for what you intend to sell. Let's say if this was planning to do tomorrow, right? So this is how the benefit of having actual a system of scale recipes where you can put in your projected quantities, but then also aggregate into your total needs for the day. This can also be then looked at from your prep cook and say, well, I need to chop 12 and a half ounces of onion, so forth and so on, as you go down your list. And so now you have all your prep done for all your recipes, so your cook can come in and just execute. This process is designed out and built into Culinary Analytics, and we'll walk through what that looks like next. Earlier, we spoke a little bit about the automation of order guides, and in this series, we want to quickly go over it again, just so you grasp how simple this makes things for you in your operation. So here we have a prediction of what we're going to do in sales tomorrow. We can toggle and get that prediction by day, and then we can actually change it if we want to, if we don't feel good about that number. The thing that would give us question or pause would be, how did we do last year? How did we do last week? And how do we do on average for the day in which we're preparing for? After we go through each menu item, telling how much we think our prediction should be, we can then click a button and submit it. And then what easily happens is, just like that, you're going to get a full aggregated order guide that says this is what you need for day one, day two, day three. You go count what you have on hand. It shows you now, here's what I need to go buy. I'm left with or what I have on hand left, or what I need to buy if it was negative. Then I'm stuck with 12 on hand, what I need to go buy next, negative on hand. So now my total for the entire 3 days will be 416 grams of this particular item. So let's dig into real inventory control. In most mom and pop operations, and even some small chains, this is a clipboard and a piece of paper. In Culinary Analytics, the Culinary Analytics way, we bulk upload your ingredients. In doing so, we get a nice unit cost, but we also get to input a PAR system. And so PAR systems are industry standard, so we built it into it. And we'll show you how ours is moving a step past that as we continue on in this particular journey. Now that we have the ingredients in, when we buy a product, we simply add it to stock. And when we sell it, it automatically deducts from it. So remember this from the other screen, is that this is how we know how much to deduct every time we sell a particular item. And so this is a quick snapshot. If we just use the PAR system, that we can go to a low stock report and instantly see the things that are low stock that we need to purchase. Super easy. All right, now let's talk about integrated POS and financial reporting. Now, in this, we're going to walk through how our system is integrated from an e-commerce website that you come part of the system that allows your patriots to come and place orders that can either be delivered or for pickup and go straight to DoorDash, as we already integrated. And then you get your financial reporting. And so the top will be what is happening in business today. And then you can toggle a date at a time and get kind of a snapshot of over time how things are going. And I always like to tell people that if your gross profit is dropping below 70%, then that Lean Six Sigma 80-20 rule kicks in, that allows you to dig into exactly what those top items are, which is driving your margin performance. And so you can go and dig into those top 10 items, correct those, and just that quickly, you can solve your margin problems. Then we can also go straight from that into toggling a period of time. So if you want to look at it monthly, daily, however you want to kind of snapshot it, you're able to get a P&L printout that's going to give you your sales, your gross profit, your expenses, so forth and so on. Lastly, your beautiful actual POS system will look similar to this. This, of course, will be images of your food, but we can make this as intuitive and easy for your cashiers to use, and ensure that they understand how to maximize your entire system and deploying things the Culinary Analytics way. Hi, I'm Jerry, founder of Culinary Analytics. I hope you enjoyed this 10-minute video about how you can maximize your profitability and the things in which you should be doing to ensure that you put the most money to the bottom line. And as well as seeing how Culinary Analytics automates a bunch of those tough decisions that you are making subconsciously every day that are costing you dollars. If you're ready to dig in deeper, click the link below and book your free one-on-one consultation. And let's explore how we can get you connected and deploy Culinary Analytics in your restaurant today. Thank you.